So just now I actually said that if price is staying bullish, I want to see it stay above 50% of the new week opening gap. So if you just zoom in here right now, you could see how this candle exactly open at the 50%. Yeah, that is my expectation. I like to see price being manipulated before I take any action. So this is how I protect myself from being a retail trap, right? Hi everyone and welcome back to my channel. So apparently trading ASMR has now become a thing because majority of your comments from my previous video is all about how calm I am when it comes to the charts. So I'm gonna try my best to keep up with it. But overall, thanks to you guys and all your comments and likes and subscribes. Now I have companies that are coming to me and offering like free funded accounts giveaway. So thank you. In the next 2 weeks, I will be giving away 2 funded accounts from FundedNext. They are actually really popular and I will be doing a review video coming up. So make sure to turn on the bell notification if you want to get in touch with all these free accounts. I don't think this will be the last project. Just keep commenting, keep liking, and keep watching whenever I release a video because it really helps my account. And I hope that I can get more free stuff for you guys as well. Okay. So, okay, right, let's get started. Small me. Okay, so right now we are looking at the week of 25th November. And as usual, we always start off with the news. So this is the news for the week. We have Monday with nothing, and then Tuesday 10 a.m., 2 p.m., 8:30, Wednesday 8:30 and 10 a.m. And then we have a holiday on Thursday. So right now as I'm recording this, it's Wednesday 27th November. So we're already here. And this is the news that's about to come up will be in 6 hours and 30 minutes. Right now it's 3 p.m. in Singapore, but 2 a.m. in New York. Okay, so this is what I was anticipating on Tuesday and Wednesday. It looks promising. Thursday has holiday and Friday is just Friday. So Friday we have our own method of trading, which is the TGIF. So depending on the entire week's range, we'll see how it plays out and whether we take a reversal on Friday. Okay, so now starting with the weekly time frame, you can see that price actually opened with a big gap. So this says that price is in a hurry to move higher into this previous week's high for me, for S&P and Nasdaq. And Dow Jones has already taken out the previous week's high just on 24th, which is Monday itself. So Monday Asian session, price has already taken out for DJ, already done so. Okay, so secondly, it would be the daily time frame. So liquidity sits above the divergence. If price is heavily bullish, we do not want to see new week opening gap 50% being covered. So here is the new week opening gap. And then I do not want to see price closing under more than 50% of this new week opening gap if we are anticipating for price to be even more bullish. And this is the divergence that I'm talking about. So we have over here high, lower high, lower high, and then high, lower high, higher high, as well as high, lower high, lower high. So overall, Nasdaq was the one that is giving us the divergence between all three. So that is on daily time frame. This is all still on Monday. Okay, so I've also marked out the inverted daily time frame fair value gap. Okay, so here we have an inversion which at ES is already above, and then we have NQ that is staying under, and Dow Jones that is above as well. So overall, I would say that Nasdaq is a bit more lagging, but you could also say that the risk to reward is higher. For example, if I was to put a trade over here and then the stop loss underneath previous day's high and then the take profit at previous week's high, you can see that the risk to reward for NQ is higher than ES, and Dow Jones is already in the take profit area. So I wouldn't even have an opportunity to enter Dow Jones if I'm bullish. Okay. Okay, so Monday, H4, it's clear where price wants to run into. I'm just waiting for time. So every time I look at the charts, I'm just looking for price points where I will be expecting a reaction, and then I'll wait for time to play out for this action to play out. So yeah, on H4, it's the same thing. You see this big new week opening gap for them. All right, so when it comes to H1, ES and Dow Jones did not tap on H1 fair value gap, while NQ did. Okay, there we go. So here's the H1 fair value gap. These are the two candles that did not tap on it, while NQ did, as well as Dow Jones did not tap on it. Okay, but overall you can see that it reacted off of this new day opening gap, two over here, one on ES, and then it did not give any for Dow Jones. So that's it for Monday. I didn't really see much, so I just let Monday play out on its own. And then here's the update for Tuesday. So weekly, we have the target of previous week's high for NQ, and this is how it would look like. So overall on the weekly time frame, I am bullish. So if the candle is red, it means that price is in a discount. So from opening, it went underneath the opening, and then this low was created on Monday's candle. So if I was to enter right now, this would be the entry point, and then the stop loss underneath yesterday's low, and the take profit above previous week's high. You see, compared to ES and Dow Jones, this would be the better risk to reward. So price is in discount of weekly candle. Look for divergence in low just created in smaller time frame. So I will be looking for divergence on the lower end because I'm looking for higher prices. And you can also see that ES and Dow Jones has a green candle, so they are already in the premium price range of the move. So NQ is the only one yesterday that closed with a red candle and rejected the daily fair value gap, while ES is above it. So currently price has taken out previous day's low for both ES and NQ. Let's see where it may potentially bounce from. But if price looks heavy, I will look for lower prices. So I will still let, price action tells me where it's more inclined to go to. So here, yesterday's candle for ES is green, while Monday's candle for NQ is red. And then for Dow Jones, it's green as well. And then all three are in the discount area on the daily time frame, where it's red color. Okay, so previous day's low has been taken out already, and this was seen at 4 a.m. So this 0407 is my favorite number, by the way. But 0407 is London Q zone, and the low of previous days has been taken out already. So from this moment on, I'm looking for higher prices because liquidity has been swept on the lower end of market, and now I'm looking for the liquidity to be swept on the higher end. So I just left this bracket there. This is the weekly one shot one kill expectation. Okay, so on H4, Still no signs of a solid stop loss level, so let's keep watching. So I'm looking for divergence underneath price. Okay, so at H1, still the same timing at 4 a.m., we see divergence below the 3 asset. So DJ will be the suitable trade for previous day's high, because we have high, look at the divergence below the pink line, we have low, lower low, higher low, and then on Nasdaq, and then on Nasdaq we have low, lower low, lower low, as well as ES the same into previous day's low. So you can see that Asian session created a higher low compared to New York for Dow Jones, and then Nasdaq, it created a lower low between New York and Asian, and then S&P as well. So that is a divergence. Okay, and then I was saying this on my iPad, which is why it's zoomed in. But this is already 6 hours later at 10:11 a.m. New York, minute 15 time frame. So you can see that from here, right? Dow Jones was the suitable trade into the previous day, the higher PDRA. In 6 hours, price already taken out the previous day's high, and then show us a big drop all the way into previous day's low. And then for Nasdaq and S&P 500, we can see that it's reversing from the 6 months high for Nasdaq, and it's reversing from the new week opening gap on S&P 500. So overall, my stand is still bullish. However, when I'm looking at price reaching into similar premium PDRA in their own charts, I would look for like a short-term retracement. 9:45, yeah. So there's a divergent candle on 9:45 a.m. So this was 11. So you can see over here, this candle itself is red, while over here we have a green candle. So this to me is a divergent candle. So not only they're reversing from their premium PDRA, they are also showing a divergence without the highs and lows being created on the minute 15 time frame. Like the highs was not different from each other because it's the same candle that's creating the high. However, the candle itself is showing me divergent. Okay, so overall price was in sync with the highs, and after this divergent candle that I marked out at 9:45, I was still watching it for a bit before I went to bed because it was pretty late, and then I spotted this divergent at the bottom. So overall, I'm still bullish in the market, and then I spotted this divergent candle for a little retracement, and this retracement actually built up the next divergence for us before price shot higher. Okay, so overall I drew out this TP and stop loss indicator, but you can see that price did not give the take profit. Instead, it's just hovering in profits. Okay, so the better trade over here would be ES, because you can see that ES actually went to take the previous day's high. So sadly, I was not in the market to watch it happen, but we also have another divergence that I will show you guys how to pick when you are in the market. Price gave divergence, and ES was the one that hit the TP of previous day's high. So now I'm gonna go into the charts to show you guys the divergence itself. So you see, this kind of extended trade is something that I don't personally appreciate. So when I'm going to bid, I would just move the stop loss to break even, and then I would be fine with getting out at break even. To me, break even is still a win. So if you guys are awake for the market, you can actually spot this yourself. So here we have a new low being created. So this is the sessions low, right? So we have Q zone for London, and then we have New York AM session, and then New York PM session. So we have low, higher low, and then lower low. And then for ES, you can see the moment when it takes out, it's the same timing, right? You can see for NQ, it actually dipped back into the 50% of this new week opening gap before pushing higher. And this point of time, at the same exact time, you can see that ES actually pushed above new week opening gap, came down to tap on it before taking out previous day's high. Alright, so if you were to do a risk to reward, it would look something like this if you're playing it safe and taking it at the 50%. And then the moment it moves away like this, you can see that at 2:15 p.m. price actually took out the low for Nasdaq, and then 2:15 it did not take out, it was still pretty far from it. So the next candle, the next 15-minute candle, when it starts moving away for both of them, you can already set your stop loss over here, and then TP at previous day's high, and this is a 1:3 already. Yeah, so let's go into minute 5 for more data. Right, so here you can see that we have an overlapping new day opening gap with new week opening gap. So a nice little reversal tap. Yeah. So when I go into the smaller time frame, I don't look at Dow Jones anymore. So most of the time when I'm choosing the trades, I tend to go for the one without the liquidity sweep. So here you have the liquidity sweep, and then over here you do not have. So to me, ES is the better trade. In the last video, I actually did an update on YouTube short on how the trade play out and my bias. So the reason why I don't want to give it away, because I still want people to come to the main video, the longer form of learning and slowly absorbing it into your brain to know how I pick my trades. And this is how I do it. I just explained to you guys. Based on the divergence that I see, I like to pick the one that has not been swept out. It's more lighter. It wants to rush higher, and therefore you will hit your TP easier. However, I was not in this trade, but this is something for you guys to study. So now it is Wednesday, 3:26 p.m. in Singapore, and it's 2 a.m. in New York. So London timing is about to happen. We're just gonna do some updates on the charts. I'm just gonna minimize it so that you guys can see my notion as well. Okay, let's just take a look at the notion expectations. So I expected price to stay out of this new week opening gap on the weekly time frame. Okay, so this is still my weekly expectation, the one that I drew previously. I just leave it here so that I know how it looks. Oh, okay, so isn't this pretty? Okay, I'm just gonna remove all of these drawings, this 945. So this makes me excited. So just now I actually said that if price is staying bullish, I want to see it stay above 50% of the new week opening gap. So if you just zoom in here right now, you could see how this candle exactly open at the 50%. So there's no bodies that is beneath of this 50%. So this to me tells me that price is still bullish, right, on NQ and as well as on ES. So this is how I journal. I like to make it full width, and then header. I always start with the news. So 8:30 a.m. New York and 10 a.m. New York. Start from weekly time frame. So you can see that the previous chart when Nasdaq was still in red, this was the discount price. So now price is already up here, and then stop loss underneath, and then the take profit above. Copy image. Okay, so I just want to have a copy of what price is doing at that point of time. This. Okay, and then next daily time frame. Okay, yes, state above new week opening gap high. Wow. NQ stayed above new week opening gap midpoint. NQ has more space to move higher. Okay, and then now going into H4. So sometimes I don't see anything on H4. I feel like my eyes are just not trained for H4. I love the daily time frame and I love H1. H1 is my favorite time frame, but I just have to keep a copy of H4. ES nearer to liquidity while NQ still has room. Yeah, I'm just saying the same thing, but I just need to make sure that it's there. Okay, H1. So this is my favorite time frame. I want to make sure I can see the larger time frame, PD arrays as well. This one is H1 fair value gap. Okay, so what I like to do on H1 is move the previous day's highs and lows here. Here. So now I have a range of the previous day's entire range up and down. So you can see that currently price is in the premium of both, for both ES and NQ, the premium of the previous day's range, entire range. So let's see, like to me, okay, what I anticipate right now, right, is for ES to take this out, and then once the liquidity is swept, it wants to come back for some sort of reversal because we're on Wednesday and we have news. So maybe just spike back down to balance some of this out, some of this, got this, right? And then on NQ, it might just fall short of it, come back down here, and then go up and take out that ultimate premium PD array that I've been waiting for up there. Yeah, so this itself would be a divergence, if you know what I mean. Like this liquidity, right, for ES, imagine if it takes out this liquidity, wow, NQ did not, then it would justify for this down move, and then some sort of divergence underneath, and then go higher. So yeah, that is my expectation. I like to see price being manipulated before I take any action. So this is how I protect myself from being a retail trap, right? By looking for the divergence first, then looking for the trade setup. So I anticipate for people's stop loss to be run out before I join the markets. Yeah, so that is my analysis for this week. I would also post an update in regards to how it play out on the YouTube short. So once again, thank you guys so much for leaving comments and liking my videos and replaying it, sharing it and all that, because it's really helping my channel out. And now I get to give you guys free gifts, as well as how I trade in the markets, my ICT strategy and all that. So thanks for watching. I hope to see you guys in the next video. Like and subscribe, turn on the bell notification, and I'll see you guys in the next one. Bye.